Hello folks, I'm LA Little and this is your weekly NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves, what happened last week? And what does it tell us about the coming ones? I do a show once a week, every Sunday night, live at 9 o'clock Eastern Time and archived on YouTube under the channel LA Little. We're going to have a programming change coming up here at some point this week. So just kind of a heads up on that. We're going to go to a little bit of a different format. We'll be rolling that out as the week gets underway. But as far as now, it's still the same, and in the markets, it's still the same. We have another up week. That's 5 in a row. The only one that can't do it is the Russell, which of course has been the weakest, as you can see here, 0.6 tenths on the year, whereas NASDAQ, S&P pushing 9–10%. So markets go up again, and that's despite the fact that it looked as if they were going to give us some sort of a pullback. Let's look at the charts. Here you can see that that push up, and what we really have happening here, you know, if you kind of look close at what's taking place, is you're starting to build out a range, and you're building out the range just above this swing point high. And that range looks something like that, right? And if you double down on that range, that gets you back down into this breakdown bar, which we of course, you know, V-shaped right over. And that would be kind of what the target would be if you start to break down. Looked like we were going to do that last week. Of course, we came down into that price point. If you look at the S&P 500 on the daily, you got down to 1990.10. That prior low over here was 1990.52. That swing point high it was coming into was 1991.39. So that's twice now you've come back into that high. That high has about 32 on it. You come into it with 28. You come into it with 22. You don't have the volume. Sellers are unwilling to sell at those lower prices. What does that do? Flip it right back around, head back up to the top. Top's got 30.7 on it. And that high is 2011. I'd be very surprised if we don't go right back up there and try to take that thing out. So, you know, if you think of the market as a series of tests, this is testing the downside of what is a 9-day range here. Trying to get over it, actually trying to get under it. Now can't get under it, so what is it going to do? It's going to go try to get over it. If it gets over it, of course, then you can extend that an equidistant amount, and you can kind of, you know, you can almost get that off these two bars, what the low and high is. It's pretty tight range, 1990 up to 2011. So you got about a 21-point range. If you break over that top, you can expect 21 points, 2032. So that's the sort of scenario that's set up here on the daily charts. You can also draw the ABCD structure that we looked at last week, and that of course projects quite a bit higher, much more. It's about 3.5% still. That's on the daily charts. If you look at it on the weekly, just V-shape up, new highs, you're over the highs, volume expands. I don't see anything wrong here. And if you go across all these indexes, they pretty much look the same. If I look at the Dow has kind of the same fit here on the daily, looks almost identical. If I look at it on the weekly, not quite as strong, but also the same sort of framework there. Here's your NASDAQ. Now the NASDAQ, of course, is not up as high. Why is that? Well, because you got Apple in it. And Apple's kind of struggling, but it was a new high, gets over the highs. Yes, last week 45.80, closes 45.82.90, you're over the highs. NDX slightly different, you know. Here's let's get the NDX up and let's pop it up here. Here's the NDX, comes back up a little bit higher. If you look at it on the weekly, volume coming into it, you had a doji last week at 40.82. You get up to 40.89, so a little bit stronger, and that's despite the weakness that we saw in Apple last week. And the reason I'm harping on apples is such a large percentage. The percentage weighting has gone down. I guess they rebalanced when I wasn't looking, because it's only about, I think Apple was like 13%, used to be about 22, so it's not nearly the weighting it was, but still a fairly hefty percentage. Here's the Russell. Russell looks, of course, a lot different. It actually lost on the week last week slightly. Volume on the way down expanded. You can see that down here. And then you pop up, you go under, back over, and you came back into some of these highs, like this prior swing point high. That top of that was 1163. You had not tested it, so this is the first retest, regenerate off that level. And so when we're looking at it, we're looking at this price point here. So you come into it, right? And if you measure up your volumes here, you get about 281 coming back into 320. What is that? Nobody wants to sell as you come in. Flip it around, take it back the other way. If you look at the weekly on it, weekly, a little bit more volume on both sides, but given the dailies, that looks like it wants to try to press back up to the upside and break out the top side again. So, right across the board, you can't argue with these indexes. Now, what's really strong is the sectors. And I'm going to pull up this again, and you have access to this if you're a registered member. You can just come in to resources, current trends, market trends. You can pop this up, and you can see here that on the market trends, almost all of these have turned back to bullish. You've only got a few that are left sideways. You got a sideways there, you got a sideways on the XLE, the IWM, and here on the basic materials and the industrials. Elsewhere, everything's bullish. Right, it's all back to bullish again. This was, 4 weeks ago, this was all bearish, and you were starting to try to break down over here. So you still have a couple, 3 indexes and a couple, 3 sectors that are weak comparatively. The XLP is actually starting to pick it up again, so this is going to change pretty soon. But for the most part, this market just keeps pushing, and it's bizarre, to be quite honest with you, because MTTF's extremely stretched, and then you've got the bizarre situation that's starting to take place elsewhere. For example, last week, the Irish bonds, the short-term bonds, actually the yields went negative. Right? This was a country that you had to bail out just a few years back. In other words, their debt was no good. Now you have to pay to hold the debt. And it's not just Ireland. Look, I mean, other places even as strange. You could imagine maybe the German debt going negative, since it's the strongest in the European Union. But last week the French debt went negative again. So you had to pay for a French bill. You had to pay to hold it. You had to pay interest instead of getting interest. That's how ridiculous it is. With quantitative easing starting to take place, the ABSs that Draghi announced on Thursday, pressures being put on all those bonds, and now you're seeing this strange situation to where they've already put their rates negative in terms of forcing the banks to pay them instead of them paying interest rates on overnight loans from various banks to the central bank. Now you're starting to see that same scenario in terms of negative yields being pushed out to customers. Folks, I mean, this is like make-believe almost, right? I mean, the only place you've seen this before was in Japan. You see what happened in Japan. What? 25, 30 years now of nothing. Are we going to face the same thing elsewhere as a result? I mean, if you just project it out, what's different? Oh, I know what's different. We're printing so much money, we're going to work ourselves out of it. And we're printing it all around the world. It's bizarre. But that's that's a story for another day. Trends up, right? Where are you going to put your money? Well, I ain't going to put it in bonds. Only place I can put is the market. That's what keeps happening. If you pop in here, and I'm just going to pop through some of these, IYT new highs, SOX new highs, the basic materials, they're pressing at new highs. The financials are bouncing, right, at new highs. Let me get the financials up here. I don't know why I keep hitting Microsoft, sorry. The financials starting to press back up to the highs. You know, on and on and on. XLK, I just talked about the XLP. Here's the XLP going for the new highs. You know, across the board, folks, it's no different. And so all these sectors pressing new highs, indexes pressing new highs, and if we go overseas, all of those are pressing new highs. I can't argue against a market where everything I look at from a trend perspective is either at the highs or making new highs. There's a few, you know, that have had a little bit of a sell-off. Here's the all ordinaries. But if I go over, I mean, just look at, you know, we just talked about France. Look what's happening in France. They're pressing right back up. Let's pull it to a weekly. They're pressing right back up. They're trying to go for the highs again. The low of the high is on the French market 45.06. What did we do? We touched 45.09. So we pushed into the low of the high, and we did it with volume. This thing wants to go to the highs. You know, if we look at the DAX, which has been the hardest hit off the Ukrainian situation, let's pull up the DAX. Here's that push, and that's on the daily. Let's pop it over to the weekly. You've got the same sort of thing going on here in the DAX, right? It's over the breakdown bar, doesn't have as much volume. The low of the high here, 98.61, you're at 97.74, not that far away. DAX wants to go up and test into resistance. So if I have to do the summary's pretty easy. Markets will only go higher. You know, I can't argue against them. It's going to be a struggle because you haven't rested. You've been, you know, straight up. I mean, this is a weekly. They're doing the same thing there as we're doing here, 5 weeks up. But you know, at the same time, it's been strong. The market's been strong, continues to be strong. So that, in a nutshell, you know, is where we are and is what's happening. Let's take a look at something that's a little bit more interesting, and that's the OX markets. So let me pop over there. So on Draghi's, you know, quantitative easing, the FXE just got hammered again after a long decline, big gap down, huge volume, and that was after it was trying to stabilize. Here's that breakdown. We had a target of about 128. It's below that now. It's 127.40 was the low. The volume starting to expand again on the downside, and if we bring it back, put it on the monthly, you can see you're coming in now for the next set of lows, and the high of the low is 125.58. This low is 126.30. If I look at these, I've got to think somewhere in there is the next target, right down in this price zone. So not that far away. Big, nice, fast decline on the way down. And so far, all it's done is invited more money into both the dollar and into all the markets around the world. On the flip side of that, of course, you got the dollar heading higher. Here's the daily, a big push up on Thursday on that FXE crumble, and then kind of a doji there on Friday. Here's the weekly. It's going after the swing point high. It's got the volume, 6.3 coming 7 into it. And if we pull it on the monthly, and the reason I'm looking at these, and here's the monthly, you can see it's pushing up in there. I guess it's going to try to get into the low of the high, which is about 22.48. Trading at 22.34 was the high. Now, I want to call your attention back. I don't have it on this chart. We only go back 5 years. But if you go back a little bit farther, what you'd see is you'd see a run up in the dollar at the price points. You know, the price points back then was about 24 or so. And that happened in September of 2008, right before the crash. You know, we're a long way away from that, but you're starting to see a pretty good, serious, you know, day after day kind of a push here on the dollar strength. That typically, you know, it doesn't always have to be. I mean, a strong dollar and a strong market can go together, but typically over the last few years, that has not been a recipe for higher prices. But as we just said, where else are you going to stick your money? And that seems to be what keeps happening. Let's look at a couple of other markets on the AUX shares. TLT, remember it broke under that retest regenerate zone on the long bonds. These were the last to do it. All the others were signaling that this would probably happen, and now it has. So you break under it on the daily. If we look at it on the weekly, we still have on the weekly we still have kind of an ABCD going, but now we're coming back in to do a retest regen off this high. That retest regen, you're coming back at it with volume, so we may see these bonds push even lower, raise the yields a little bit, and then I guess that to some extent is a reflection of the QE ideas on Friday and this week, that you know, maybe QE here in the States isn't over. I wrote an article saying that I suspect we're going to see more QE before it's all done. We'll see how that plays out, but you know, I don't, once you start this mess, I don't know how you get out of it, and honestly don't know how we're going to get out of it. Here's gold. Gold's down here 4 days in a row. Not a particularly appetizing position to be in. It's still hanging on. This low on the weekly was 121.82. Closes at 122.06. So it actually held on the weekly after a test, and we'll see if it gets a bounce out of here. It's time. I mean, if gold's going to make a move, it's got to get a bounce out of here, because if it doesn't, it's definitely going to come after this low and come after the highs of the lows, which is back over here at 119.62, and this low 119.42. That would be the next target if it can't hold and start to bounce here. All right, so I think that's a pretty good push across most of these things. Let me turn over. There was a question, a written question texted in here a little bit ago to look at the VIX. Let's take a look at it and see what it looks like. So a gentleman wants to buy the VXX, and so this is the futures, the ETN futures on the VIX, and so he's looking for volatility to increase. And I was looking at this right before I came on the air, and I was curious about what the monthly looked like. Now, if you can't read those numbers, that's something like 3,000 up there, right? This is 5 years. So 3,000 down to 26. That would have been a hell of a short. Just to get short and stay short. Talk about a return. Maybe the best trade on this is just to short it anytime it spikes. But that's the long-term chart. Let's go into the daily, which is what the gentleman is looking at. So you're coming back into this big spike up. That low is 27.25. You got your 27.45. You got as low as 38. You got a swing point low there. You got a low here, and you got a low there. So what I would be doing here, and it's not a bad place to take a shot at it, but what I'd be doing is I would be watching these lows, and I would be putting my stops just down underneath them. And as long as it holds them, fine. If it doesn't, you're just out, right? And if you get your spike like you've seen here before, if you get that spike up, of course, you're going to make some good money. You don't have to risk much to make a decent amount. And depending on whether you're playing options on it or whether you're just doing this itself, it's not a bad place to look for a trade from a reward risk perspective. Is the probability of success good? Well, it looks to me like you are going to test this low, so I'd make it test it and show you that it's not going to break it down. 27.25, that would put you within about 25 cents of a stop out, about 30 cents of a stop out. So you could put your stop, say 40 cents lower, if it holds this level, and that gives you a higher probability of actually succeeding. So not a bad trade at those levels. That's where I'd be looking at it. As far as this week, there's no economic news. There's no, you know, geopolitically, yeah, there's still some skirmishes in Ukraine, but nothing seems to be happening there. You got QE runneth over, right, in terms of Europe, so that's going to be buoyant for the markets. And now you had the jobs numbers on Friday that suggests the Fed is fine not to be raising rates anytime soon. So you've got the, bad news is good news things going on. So when I look at all of that, it's like, okay, what's going to drive us lower on the markets and therefore the VIX higher? Where's the volatility going to come from? You don't have the Fed until next week. I don't see where it's going to come from. I don't know where it's going to come from. So I would definitely make it test the bottom of this bar and then use that as your mechanism to trigger your trade. Okay? All right. Let me see here. So, I keep harping back to Apple. I did that earlier, so I want to pop over. So bear with me and let me get up a couple things here and show you a couple things. Because when I look at this market and I ask myself, okay, what's going to drive this market lower if anything does, right? You have to start looking at the weighting structures and saying, okay, what can push it lower? What is out there that can push this market lower? Well, Apple's 13% of the NDX. Okay, that could cause a problem. In other words, if this thing really does do a little bounce and then starts to fail, I've already been stated before, maybe 101 is where you could get to, maybe 101.50. I think it's going to have a lot of trouble there. You've got the Apple event on Tuesday, so assuming Apple can drive higher tomorrow, maybe up into that event, then sell back down, what would that do? Well, that'd set up a nice ABCD structure to take this thing lower if it did. So you can imagine, let's just give it the benefit of the doubt and say it gets all the way up to there. What can that do? That can drive you down into the bottom of this price point, which is the big bar. So Apple at 96, yeah, that could put a little crimp on the market. Nothing huge, but certainly could put some pressure on it. Could cause some volatility for that VIX trade. Where else? Well, the only other place I saw anything really happening was over in the biotechs. And if I just glance at some of these started to take some hits, some of them on volume, some of them not. Here's Alexion, pharmaceuticals. This is about 6.5% of the weighting in the IBB. The IBB weighting is about 13-14% of the NDX. So you got Apple at 13, you got these guys at 14. So that's about 27% of the NDX that could potentially have some pressure. The biotechs are what took us down earlier this year. Here's Biogen, volume starting to expand on it. It did come back in and test this, held. Looks like it's going to hold though, so I don't know that that one's going to crumble. Celgene, no real volume, but starting to come off a little bit in price. The one that got my attention was the leader, which is Gilead. These guys had a big spike down, on big volume. Either wiped out a bunch of trades or really is setting the tone. When I see something like that, that says, okay, that looks like a problem and it's probably going to come down and test it again. 97.54 closes at 105. That's an $8 move. That's 8%. I don't know, folks. Something's wrong here, right? I know that there was talk of Friday. There wasn't a lot of news, but there was talk of Friday of some pressures on one of their drugs in terms of pricing. I don't know. When I see that kind of action, though, that's some larger operator unloading. I mean, that's not mom and pops taking and selling their shares. You don't get a 32 million bump in volume off mom and pops. That's large operators pushing stock out. So the biotechs maybe give some pressure. The Apple maybe gives some pressure. But then you look elsewhere, there's not much else. I mean, most everything else looks pretty good here. And so if we're going to get pressure, I don't see anywhere else it can come from other than these places. So that's where I would probably be focused if I was looking for something. Okay, hey, I'm going to wrap it up there. Unless you got some questions for me, let me take a quick look and make sure that nobody else is buzzing me. So no text message. Let's see what kind of email I got. Nothing there, and nothing up here. So I'm going to leave it at that, folks. Thanks for joining me. We'll be announcing those programming changes later this week, so tune in for that. And as always, I invite you back each and every day, and I'll give you my take on what's happening in these markets. That's the weekly wrap. Have a great night. I'll see you next time. Good night.